Hello, and welcome to the Consumer VC, where we're going to be diving into the world of venture capital and consumer-facing startups. I'm your host, Mike Gelb, and over a series of interviews, we're going to learn about how early-stage B2C startups raise money and look into the inner workings of venture capital. If you enjoy this podcast, I would really appreciate it if you would rate, review, and subscribe on your favorite podcast app. And for all episodes, you can go to theconsumervc.com. Our guest today is Rick Heitzm, founder and partner of FirstMark Capital, and focuses on consumer and enterprise investments in media, advertising technology, gaming, mobile, and data services. Rick has led investments in market leaders such as StubHub, which was acquired by eBay, Riot Games, which was acquired by Tencent, Pinterest, Airbnb, and many, many more. It's really quite remarkable. Rick has been recognized by CB Insights and New York Times as one of the top 100 venture capitalists globally. He serves on the board of directors as well of the New York Venture Capital Association. I am so excited to share this episode and my conversation that I had with Rick. So without further ado, here's Rick. So Rick, thank you so much for coming on. How are you doing today?
I'm doing great. Thanks for having me on. I appreciate the opportunity.
Thank you. So Rick, what attracted you to work in venture capital and early stage investing in high tech?
Yeah, so I started off my career as an investment banker, and in the 90s, as I was there and I was working in distressed buyouts and investment banking, kind of the internet arrived on the scene, and in my mind, it kind of changed everything. And it was completely new and exciting, and you saw all these paths of growth, and you saw, value being created and businesses being disrupted, and it was clearly the new thing, and I wanted to be involved. And it was a great path in, and I've been a venture capitalist, I've been an entrepreneur, and everything around it's been fantastic.
That's awesome. And of course, you've had quite a lot of wins along the way. Congratulations to that. I'm sure that you've heard thousands upon thousands of pitches. And in the early stage, when there's really not that much data to go on, what are some qualities in a founder that you look for?
In a founder, I like someone who has deep domain knowledge. So someone who has really thought about the problem and why what they're doing, although seeming crazy to most people, makes a tremendous amount of sense to them and to me.
And so what makes investing in consumer startups difficult, or I would presume in some ways more difficult than enterprise, or what are some of the differences?
I think that there's a big difference between consumer and enterprise, especially at the earliest stages. That enterprise, especially SaaS applications and FirstMark, we've done a lot of them in a lot of big companies, and they tend to be more tactical, and there tends to be more of a playbook of customer acquisition, product development, and the way that they mature through the market. Whereas consumer companies, tend to have a lower success rate, but they also tend to be bigger successes. And if you think about networked business models and consumers building on each other, that can happen very quickly. So if you think about it, from a gaming perspective and things like Riot Games, where there was a social and viral effect, which just made the whole company blow up and become a very big company very quickly. And even the network effects you would see at marketplaces like StubHub and Airbnb have shown that, although the original idea may be seeming crazy, if it works, it could be a very, very large company.
That makes a lot of sense. So apart from your incredible track record, what do you believe, first and foremost, is FirstMark Capital's competitive advantage compared to other investment firms?
So I think there's probably three things. I think most relationships between VC funds and companies actually start with the relationship with the partner and the founder. And, do you have a founder who you believe sees the world, or at least their part of the world, in a very similar way to you? And do they share the same ethos of the grit, determination, and vision it takes to get from here to there? And I think that's something that, you can't, it's a more of a fit thing than why someone's better than anyone else. The second piece would be, how do you leverage successes you've had in the past to help a company look around the corner? So if you think about areas like marketplaces, and we've invested in Upwork and Pinterest and Airbnb and StubHub, what have we learned about scaling multi-billion-dollar businesses in that sector, which may be obvious or non-obvious to the entrepreneur, but also be able to help them and save them time and speed them to market. I also think that, as we think about, what is success in bringing a successful venture capital partner and firm into a company, a lot of these companies, when they're starting out, have no credibility. So, they haven't really done much yet. And, our secret, or I guess what we think is special about us, especially in the New York area, is the credibility we could lend, the relationships we could build to make that company seem like a much bigger player. And that helps a lot in attracting capital, attracting top talent, and being able to do sales or business development relationships that a company of their size would have no right doing. I would probably also say the third thing that makes us, highly competitive in the market, and we rarely ever lose a deal we want to do, would be we have a platform team. And we were early in investing in our platform, and our platform has really been able to kind of make us bionic. And everybody has the opportunity to have a partner in the room, have someone join the board, and there's more than one firm that has a tremendous amount of success. And we often compete against the best firms that have great track records also. But not only do you have a partner in the room, but you have a whole infrastructure that can help founders scale the business. So we focus on business development and corporate relationships, talent, and we think that besides financial capital, which is necessary, the most important attribute we could bring is human capital, and being able to bring that to bear, as well as being able to build a community and a network for our entrepreneurs for both support as well as knowledge.
Do you mind describing in maybe a little bit of detail the actual FirstMark platform? I saw that you guys put over like 100 events on each year, which is just amazing. Can you talk to me a little bit about the types of events you guys put on?
Sure. So we have a range of events. There are over 100 events. There's kind of all sizes and shapes and flavors of events. So we have private events. So we have things like our CEO Summit. I think this is going to be our 12th year of doing a CEO Summit. And that's helping our CEOs both network with each other, as they're often people who are struggling with the same issues. And then we also we're at a point where we have experienced entrepreneurs, people like Toby, who's the founder CEO of Shopify, has scaled a business to tens of billions of dollars of value, and kind of what he learned along the way and his ability to give back to the FirstMark community. Then we also, and a series of kind of private events like that. We're running it's our 13th marketing summit this coming Wednesday, where it's not only how to market if you're a FirstMark company, whether it be consumer or enterprise, but also bringing together CMOs of some of the largest businesses in the world, so they can learn from us and we can learn from them, and we consider that a semi-private event. And then we also run 4 of the biggest technology meetups in the world, and we have about those 4 conferences we put on 10 times a year. And they're probably 4 or 5 hour conferences, and they deal with what we think are some of the biggest trends that we're seeing in the marketplace. So we have data driven, which is all trends around data and using data to make decisions, including machine learning and artificial intelligence. That's here based in New York. It's the biggest meetup of its kind in the world, and it's recently picked up an arm in California as well as in Europe. We have design-driven, which is the intersection of tech and design. It's the biggest meetup of its kind in the world. Code-driven, which is the biggest software developer meetup on the East Coast. And hardwired, which is anything that on frontier technology that uses software as a brain. And so those are public, and we have over 50,000 members of those communities that we could use as kind of a gathering post around particular interests, especially in the New York community.
So when things go bad, which they always do at one stage when you, as a company, is growing, what makes a good venture capital partner? Because it seems like the thing to say that from VCs is that we're founder friendly. What does that truly mean to you?
So we rarely use the term founder friendly because it implies just saying yes to everything in our mind. And I think a lot of people have taken that to founder friendly to just saying yes to everything. Our version of being founder friendly is helping our founders be as good as they can be and build the best company they could build. So that's a different version. And so it means disagreeing at times. It means pushing people on their thought process and their logic. It means pushing folks to think deeply about how they configure their team and the people they need to add to their team. And I think that the way we view that founder-friendly world is, we're going to help you to the best of our ability. We're going to work incredibly hard, hand in glove with you, to help drive the business to be as good as it could be, and especially our CEO leaders getting the best out of themselves. I think that that might be a slightly different version of the world than what other people see, but it's super important. And as we think about what's going to make them successful in the future. And kind of hitting on the first part of your question, I would say most of our companies, even the most successful ones, have had a time where they thought the business wasn't going to work and it was going to go away. And at that point, it's kind of being a foil where we could say, hey, it's not that this maybe we ran an experiment that didn't work, or maybe there was a issue that was either in or out of our control, which wound up being incredibly bad. But I think our ability is to being able to be a support at that point, saying, we've seen this 100 times. We know this happens, and we still have a great idea. We still have a great team. We could push through this temporary setback and ultimately achieve success.
And of course, this is obviously a long-term partnership. It's one that's expected to last for 7 to 10 years. How should founders do their own due diligence on VCs?
Yeah, it's actually fairly straightforward. In that you go to the internet, you could find out the companies that we've invested in, find out the boards which I've sat on, and just call them up. I think, especially as, you get into often in these times competitive situations, we view ourselves at FirstMark as being 100% referenceable. So we say, just call, let us know, especially if we're engaged, interested, thinking about creating this long-term partnership. Let us know who you want to talk to. We'll introduce you to them, and we'll figure out, if we're a good fit for you and you're a good fit for us. And people, often, people ask about companies I invested in that succeeded, people that failed, how we treated them as a firm, and I treated them as an individual during the tough times. And, that's kind of where you make your reputation, and not only the good companies, but how you treat people and how the firm and the individual reacts during the tough times.
Of course. What type of cadence of communication do you like to hear from your founders?
It very much depends. And so it depends on the person, and it depends on also what's going on at the company. So I have some founders I text with or call or email with almost every day, especially when you're going through a financing transaction, a sale transaction, a new product launch, a big press push. You want to be in communication, even if it's just a quick text where someone might want input on a nuanced issue. Other times that are slower, or founders who are, who might be going through a tactical path, or might be, a slower part of the company's development, you might talk once a week. But I think, the good thing about that is if you establish a great relationship early, that cadence conversation and comfortability kind of comes naturally.
Finding product market fit. I know there's tons of articles on this subject, but how does a founder know when they have product market fit when it comes to consumer?
It's really hard to pick out one thing. I would probably say that the key thing that you see with some of the founders is referral. And we tend to be very data driven, and even on the consumer side, most of our founders are very data driven. And what they're able to see is, wow, we're seeing engagement that we didn't plan for, or more importantly, we're seeing referral traffic that wasn't expected in our model. And what it means is that your customers are so excited about your product, and you could see it in NPS and a bunch of other stuff, but it's just very clear in the numbers that they're telling everybody about it. And I'm sure you've had magical experiences with consumer companies where you're like, wow, that was magic. I need to tell everybody about it. And that winds up, you see that in the numbers, and then you see that also in NPS, and you see that in increasingly in kind of reviews and your social factors, that people are saying, I just tried this out. I just tried out Roman Health, and that was a magical experience. I was on Pinterest, and I got lost for 2 hours because I was having so much fun. All those things are kind of very clear, and it's sometimes often hard to find that magic, but really incredible when it happens.
How should those that are thinking of starting B2C businesses evaluate if their proposed solution is the right solution to the problem?
Some things are you don't know until you try, and I would say most startups, including maybe even especially consumer startups, aren't completely, launched before they're completely baked. They think that there is a particular type of game or a particular type of commerce experience that people would like, and they try it out, and sometimes it's not even what they expected. Folks love one part but not another. Folks really like a game mechanic, but they don't like the social factors. And like a lot of things in life, the only way to do it is kind of get into it, start having it, start working through it, get feedback from your customers, and just work like hell to iterate.
So I know that you've invested in several different consumer marketplaces over the years. What do you think is the next stage for online marketplaces?
We've seen a lot of really successful three-sided marketplaces where you're bringing multiple people together. The clear one, which has been, some of the last phase of big companies, are the DoorDashes and Postmates of the world, who bring together a merchant, a consumer, and a delivery item. So it's kind of a much more complex transaction. We've also and something similar to that would be Omaze, which is bringing together charities, unique experiences, and consumers to be able to raise more money for charities. So that's kind of on the edge of bringing three people together as part of that experience. The other thing that we're seeing in marketplaces is palettes, and you're starting to see, and it's not in our portfolio, but Roblox, which is a gaming platform which enables people to build their own games. So that marketplace, it's a marketplace for games in which a lot of the content or product is user generated. And it's existed for a while, if you even go back down a very simplistic basis of Etsy. So Etsy, obviously is handmade, and it's really just a place for folks to not only express themselves, but to earn income. And I think you're seeing a similar thing in the video game industry, and you'll see more about content going forward.
No, absolutely. In today's age, how do you think about online customer acquisition costs? Since online marketing is just becoming more and more expensive, since you only have two main distributors in Google and Facebook.
That's the problem. And I think the best companies in consumer hopefully have a differentiated product. So although they're trying to get working through the same avenues in those two huge kind of behemoths on customer acquisition, where you have direct competitors of people selling the same product, or indirect competitors, people trying to sell to the same demographic and driving up prices. So you have to be completely differentiated in your value prop, and hopefully more valuable to your customers, and therefore able to do more. The other thing is that the best companies are constantly iterating on the edge. So right now people are finding a lot of ROI in Pinterest, and being able to drive higher return on investment in Pinterest. Certain companies are finding a higher ROI in Snap. For a while there was the influencer marketplaces where you're able to use influencers, especially in video, to drive a higher ROI if you have the right tone and the right people. So you're constantly testing new things. You're testing things on the edge, and if they work, and you're thoughtful enough about your experiments, if they work, you just dive into them. So if you feel like you're able to put $1 into a marketing channel and get $2 out, you test and you put as much in as possible, so you're not playing the same game as everybody else.
What are some consumer trends and opportunities that you're really excited about?
I'd probably say the three-sided marketplaces are going to be huge, and you're seeing more companies that are providing more kind of elements as a service. So whether that's delivery or cars, I'm a big fan, although I'm not an investor in Turo, which has unique things. And I think those marketplaces which provide something completely unique is going to be different than the normal kind of consumer shopping experience at Amazon. The other thing is I think we're still in the early innings of video games. So I think everything around gaming, whether it be format or structure or development style, is all going to change tremendously. I would probably say just because I like to do things in threes, a third mega trend we'd say is the consumers taking more control over healthcare. So having a direct-to-consumer healthcare experience, and whether that be controlling the cost of their own healthcare, getting a higher quality of experience through greater customization, or really understanding more about their body and understanding more about what works for them in somewhat personalized healthcare experience.
Yeah, no, absolutely. I mean, I can see also marketplaces expanding into more regulated industries such as healthcare. So what is something that you would change when it came to venture capital?
Probably think that if there was more curation on the social side of venture capital, I think that oftentimes, the lack of verification, founders read something on Twitter and take that as gospel. Whereas I think that there might be more nuance and can be expressed in 140 characters, or maybe the person providing the advice is providing bad advice. So, oftentimes when I talk to founders, especially ones kind of outside of our portfolio that I'm just helping and just helping along in their entrepreneurial journey, they've globbed on to an idea which is not a very good idea and it's not a sustainable idea, but they've read it on Twitter or they've heard it from someone who heard it from someone, and therefore they have a hard time letting that go.
What's your advice for founders that maybe live in secondary or tertiary markets?
We do a lot of things in secondary and tertiary markets. We're not afraid of different markets. We've done things in Columbus and Philadelphia and Baltimore, and I was Shopify's in Ottawa, and we've done things in Montreal and Toronto. And so we think that there's entrepreneurship everywhere. And we think the democratization of tools will make it easier for people to build companies in those places. And they're easier to either build distributed teams or have people who want to live in kind of non-traditional venture cities. So we think those markets are great, and we're going to continue to invest heavily in them. I think the other thing that you have to think about when you're in those cities is you're still competing for venture dollars. You're still competing for human capital with everybody, in San Francisco and New York and LA and London. Can you tell a differentiated story? Because if you have great people and you're able to tell a differentiated story, I think the capital will find you. And you might need to be a little bit more prepared to do that than if you're able to, walk south of Market in San Francisco and see 100 different venture capitalists. But it's the world's more open to those cities than ever before.
I guess that leads me into my next question. I heard one venture capitalist say that he said it doesn't matter as a venture capitalist where you actually live, considering all of the amazing communication that's out there. You're still able to invest all over the world. How do you think about actual like hubs and startup ecosystems with the ability to also communicate worldwide?
I think that it's important to be able to be present for your companies, and whether that's being available to have a coffee if a founder's struggling through a difficult time, whether you're available to interview somebody in a key position. So being physically present matters a lot. And it's not only being physically present at board meetings, but being physically present when you're needed, which often isn't on a set cadence. So I think it's harder than you'd guess to live or work somewhere else. At the same time, I do think the tools are getting better. I do think teams are becoming more distributed, and I do think if you're able to use those tools, you could probably live anywhere if you're willing to spend a fair amount of time on an airplane.
Yeah, and I would imagine it's also harder to source, right? If you're far away from an ecosystem that you're targeting.
It's push and pull. I would say it is a bit harder to source because, again, if you're south of Market in San Francisco or Union Square in New York, you have tons of entrepreneurs who are around you. I would say the thing that my friends who don't live in a major city who are investors have said is positive for them is you're also out of the noise. So, oftentimes you don't have time to think, nor would you have time to have time to really process what you're focused on. And I think a lot of the best investments come from independent thought and outreach. And a lot of my best investments have not walked in the door, but we've reached out to them because you're interested in a particular segment or a particular trend. And maybe if you're out of market, you're not, you're out of the noise. It gives you more thoughtful time to think about what the companies you want to invest in instead of, what's coming through the door tomorrow.
Yeah, that actually makes a lot of sense. Deep thought is very, very important when it comes to obviously assessing markets and opportunities. What's one book that has impacted you personally and one that has impacted you professionally?
Impacted me personally is probably why we sleep. So it's just a new book about how and why we sleep, and you unlock the power of sleep and dreams. So how often I probably in my 20s and even my 30s I thought about sleep as stealing time from doing other things I wanted to do professionally or personally, instead of being able to embrace that as a rejuvenation and focusing more on quality than quantity. And then on the professional side, I still think I'm still a huge fan of Moneyball. And being able to think about the world differently, and being able to say, given constraints you may have, and what the constraints that Billy Beane might have had in Oakland as opposed to a major market, and how he thought about how he spent his time and money and effort, and to create new ways to look at the world, even though they might be completely orthogonal to conventional wisdom. And I just think that's a great lesson in business and in life.
Absolutely. No, absolutely. I thought Moneyball was amazing. So, what is your most recent consumer investment, and why did you invest, and why are you excited about it?
I would say my most recent consumer investment that's announced. So I don't want to steal anyone's thunder or my own thunder, but I would say Perch Homes, which is it's a marketplace for home ownership, and what they actually are able to do maybe differently than the iBuyer market like Opendoor or traditional home brokers is they actually give you the ability to both buy and sell. So most people, historically, since the beginning of time, were treated as those were two separate transactions. There's a life change, whether you're getting married, you're having a kid, you're maybe retiring, and then therefore you have to sell your house and buy your house. You might have two different brokers. They might not have a bundle transaction. You might have used brokers traditionally for discovery and for pictures of the house. Now the whole discovery process, obviously, through the Perches and Zillows of the world, make it easier to find what houses are for sale, how much they cost, what do they look like, and your broker should be able to provide you that next level of service of managing the transaction in a digital way, and both buying and selling your house. So usually there's an aspirational need or a want to buy a new house, and then selling your old house is kind of part of the transaction. And it's something that also needs to be managed actively. And Perch is able to manage both those in a completely digital process at a substantially cheaper price. So it's a great serial entrepreneur here in New York, Court Cunningham, and he's built a great team, and we're super excited about it.
That sounds really cool. What's one company that you had the opportunity to invest in, didn't, and in retrospect, wish you did?
There's a lot. I've been doing this for a long time, so I've made a lot of mistakes. There was a long time ago, I was talking to a guy at a board meeting, and he was telling me about a new search engine that was just a better search engine than the Lycos, the Dog Piles, the AltaVistas of the world, in around 2000. And I asked about the team, and they said, well, it's two kids who just dropped out of school. I asked about the revenue, and they said, there's basically no revenue. And I asked about the price, and they said the price was super high. And I thought, does the world really need another search engine brought to you by, two entrepreneurs with no experience that has no revenue at a high price? And I think this was probably 2000, 2001, and it was the Series B of Google. So I think that one I'll remember probably for a long time.
Yeah, but I mean, still seeing your track record is still quite unbelievable. So what's one piece of advice that you have for founders that are either looking or currently are building consumer companies?
I think you have to think about doing things that are different. Maybe one of the traps that people get caught into is not being innovative enough. And you see people who are who are providing something similar to either another startup or even a large incumbent that haven't innovated. So I'm going to do something that Amazon does, but it'll be subscription as opposed to non-subscription, and therefore it's not different enough that either the incumbents or other startups can't compete with you, and also it's also not different enough that you're having multiple levels of innovation that provides you a big enough lead that can build a big enough company. So thinking about why are you materially different and why is that a sustainable differentiation is the key thing. It's a really hard thing to do because you don't want to be too far out there and have people think you're crazy. But on the other hand, you really like to look for people who you think are crazy or think are doing something completely different.
Now, in terms of being different enough and, developing your moat or your, competitive advantage, what do you believe are some maybe elements or things that people might think are a competitive advantage, but really you don't think they actually are?
I would probably say large amounts. And obviously this is telling of the times and where we are today. I would say large amounts of bad revenue. So if folks can grow, but they're not making any money on their customers, it's a false signal and it's a vanity metric, as opposed to do you have real business model revenue? Is that real business model revenue? Having economics that everybody's winning, and you could even look at some of the ride sharing companies that they're able to drive a lot of revenue, but everybody's not really all that happy in the transaction. The regulators aren't happy. The drivers don't feel like they're getting paid enough. The platforms themselves don't have a sustainable business model at this level of revenue and those unit economics. And even the customers are saying, hey, if you raise prices anymore, I'll look at alternatives or just take the subway. So you could grow very fast if your economics don't work or the value proposition doesn't work. But you have to be creating enough value in your business that all players in that ecosystem are able to capture enough value to make it worthwhile to them. Or your business is going to change over time. It might not be as big as you thought, or it might be more different than you might have guessed.
Right. No, I think you've raised an excellent point. When do you think a founder should focus on the sustainability and profitability of the business model versus purely growth?
Well, I think you have to get in business, and oftentimes you have to do things that are not business model or not sustainable just to get in business and start learning, right? I mean, it was the Obama O's at Airbnb where you're kind of selling cereal to pay for places to be able to just start getting in business of renting out rooms at the Democratic National Convention. So that's hey, you're doing something that's not sustainable, but you have to be learning enough to be able to say, I'm doing this, or you have to be aware enough that I'm doing this non-sustainable thing to get to the sustainable thing. I'm selling cereal today because I believe if I have a marketplace for houses and places to stay on Airbnb, that's my sustainable business model. This is just a way to jumpstart everything. And so that's kind of the key thing that people have to think through. And it's okay to do non-sustainable things, but it's a means to an end and not an end in itself.
That makes a lot of sense. Well, Rick, thank you so much for your time. I really appreciate it.
No problem. It was wonderful having me on, and I'm happy to do it again sometime.
And there you have it. It was such a pleasure having Rick on the podcast. And Rick, thanks so much again for taking the time. I really hope you enjoyed that as much as I did. If you want to keep up to date with Rick, you can follow him on Twitter at Rick Heitzm. It will also be in the show notes. If you enjoyed the episode, which Since you're still listening, I hope you have, we would love it if you would rate, review, and subscribe on your favorite podcast app. For all episodes, check out theconsumervc.com. And if you want to follow along behind the scenes, you can follow me on Twitter at Mike Gelb and at ConsumerVC. All episodes moving forward will be released on Mondays and Thursdays each week. Thanks again for listening, folks, and until next time.